Welcome back to Investing Talk Podcast, where we help make sense of investments. Today, we're looking at Captivision, ticker symbol CAPT. And, well, this company's stock has been all over the place. Imagine a stock that's gone down over 94% in just 1 year. Sounds pretty scary, but some analysts think it could go back up 7% next month. So is this a good sign, or just some people hoping? To help us figure this out, we've got our market expert here.
Well, first, Captivision is having some real problems. Their earnings aren't good, their revenue isn't growing, and they're losing money.
Let's talk about those losses.
Huh.
Their last report, June 30th, 2024, they had revenue of $17 million, which doesn't sound too bad, but they also lost $85 million. And where'd all that money go?
That's a good question. If you look closer, $24 million went to general and administrative expenses, and only $1 million went to research and development. That's, well, that seems strange.
Yeah, for a tech company that's working on interactive video, you'd think they would spend more on R&D. As like they're more focused on surviving now than growing later.
Yeah, that's a good point. You'd think innovation would be really important for a company like Captivision, especially if they want to stay competitive. This low R&D spending could be a warning sign for investors. It might mean they're not focused on the long term.
Makes you wonder if they're falling behind the competition, especially in a market that's all about new ideas and pushing the limits.
That's a good point. But even though there are all these challenges, there are some things that might interest some investors. For one, the short interest for Captivision is low, less than 1%. So that means that most people aren't betting against the stock.
So even with the stock going down so much, some people still think it could do well.
Yeah. And then there's the technical analysis. When you look at indicators like the 50-day and 200-day simple moving averages, Captivision is way below both. This means that the price has been going down. But the relative strength index, the RSI, is around 35, which means that the stock is getting close to what's called oversold.
Okay, so for people who don't know about the RSI, can you explain what that is and why it matters?
Sure. The RSI is an indicator that measures how much the price has been changing to figure out if a stock is overbought or oversold. It's a line graph that goes from 0 to 100. If it's below 30, that usually means the stock is oversold, and above 70 usually means it's overbought. So with an RSI of 35, Captivision is getting close to that oversold area.
So like the price has gone down so much that it might be a good deal. At least that's what some investors might think.
That's one way to look at it. But it's important to remember that investing in a stock like Captivision can be risky. And this is where beta comes in. Captivision has a beta of 1.83, which means it's a lot more volatile than the whole market.
Whoa, 1.83. That's pretty high. Could you explain what that means for people who don't work on Wall Street?
Sure. Beta is a measure of how much a stock's price goes up and down. A beta of 1 means the stock moves the same as the market. If it's more than 1, it means the stock moves more than the market, so it can go up or down a lot more.
So Captivision's price can move a lot more than most other stocks.
Exactly. That means that you could make more money, but you could also lose more money.
It sounds like investing in Captivision is like riding a roller coaster. It could be fun. Or it could make you sick.
Haha. Yeah, that's a good way to put it.
So we've talked about a lot. And it seems like Captivision is, it's complicated. There are good things and bad things. But before we move on, can we go back to the difference in spending between G&A and R&D? It just seems, I don't know, it seems wrong for a tech company, especially one that's not doing so well.
Yeah, that difference in spending is, it's important. It makes you think about what Captivision is planning for the future and whether they can keep up with the changes in the market.
So is this because they have too many managers? Are they trying to save money in the short term? Or are they just not interested in innovation anymore? We'll look at these possibilities after the break.
Yeah, we'll be back in a few minutes to talk more about Captivision.
Welcome back to Investing Talk Podcast. We're trying to figure out Captivision and if it's a good investment or not.
Like we were talking about before, that difference between what Captivision is spending on general and administrative stuff and what they're spending on R&D, it's a big warning sign.
$24 million on G&A and only $1 million on R&D. It's like they don't care about innovation, which seems wrong for a tech company, especially one that's working in a new area like interactive video.
Yeah, it definitely makes you think about what they're doing. To understand it, we need to look at how Captivision makes money. and what their competition is like.
Okay, so what exactly does Captivision do? Like, what's their main business?
They make interactive videos, mostly for marketing and advertising. It's like they're trying to make ads more interesting so people will pay attention.
Interactive videos. That sounds like something people would like. I mean, everybody's on their phones and computers all the time. Is this a growing market?
Yeah, definitely. People want more interactive content.
Hmm.
And businesses want to keep people's attention, so they're looking for new ways to, stand out.
So you'd think Captivision would be doing well, but the numbers don't look so good.
Yeah, that's the weird thing. They're in a market that's growing,
Yeah.
but they're not making money.
Could this be because they're not spending enough on R&D? Like maybe they're not keeping up with the new technology.
That's possible. If they're not investing in R&D while their competitors are, then they could fall behind.
And then it just gets worse, right? They can't get new customers, so they can't make more money, so they can't invest in the future.
Exactly. It's a downward spiral. It seems like they're just reacting to the market instead of trying to be the leaders.
So the high G&A expenses could mean they have too many managers,
Hmm.
and the low R&D spending could mean they don't care about innovation. Is that right?
Yeah, that could be what's happening. We don't know for sure what they're thinking, but it's something to think about when you're deciding whether to invest.
And this goes back to what we were talking about before, with the stock being oversold.
Yeah, some people might think now is a good time to buy the stock because they think the price has gone down too much.
But like we said before, the beta is high, so it's risky.
That's right. If Captivision starts doing well, the stock could go way up. But if they keep doing badly, it could go way down.
So it's all about how much risk you're willing to take.
Yeah. Do you think Captivision will do well in the future? Or are the risks too high?
That's a tough question. And it depends on, what you're looking for as an investor.
You've looked at the numbers, we've talked about the market, and we've looked at the risks. Now it's up to you to decide if you want to invest in Captivision.
We've talked about a lot of things, but there's one more thing we need to talk about: the management team.
Yeah. The people running the company are important, especially for a company like Captivision that's facing challenges.
So who's in charge at Captivision?
Yeah.
And what have they done before?
The CEO name, has been CEO for 5 years. He came from a bigger tech company, so he knows about the industry.
That sounds good. If you worked at a big tech company, you should know how to grow a business and deal with all the changes that happen in tech.
You would think so. But his job at the other company was more about operations and logistics, not about product development or innovation, which are probably more important for Captivision.
Oh, so he's good at running the business, but maybe not so good at coming up with new ideas, which is what Captivision needs to do.
That's a good point. And if you look at the other people in charge, it's kind of the same. Most of them have experience in business and finance, but not so much in, interactive video.
So they're good at the business side of things, but maybe not so good at the tech side of things, which is important for a company like Captivision.
Yeah, that's what it looks like. Now, we don't know exactly what they're doing, but it makes you wonder if they can, lead Captivision in the right direction.
So let's go over what we've talked about. Captivision stock is going down. They're losing money. Their spending doesn't make sense. And the management team might not be the right people for the job. That's a lot of problems. Is there anything good about Captivision? Any reason to think they can turn things around?
Well, even companies that are doing badly can find ways to get better. They can change their strategy, come up with new ideas, and become, more successful.
So what would Captivision need to do to get better?
The biggest problem is that they're losing money, so they need to make more money. Or spend less money. Or, both.
How can they do that?
To make more money, they could try to get more customers, they could work with other companies, or they could make new products that people want. And to spend less money, they could try to be more efficient. They could, renegotiate contracts, or maybe even lay off some employees.
So they need to make big changes. But if they can do it and start making money again, then maybe investors will start liking them again.
Exactly. And if they can also be more innovative and make new products that are really good, then maybe they can be successful again.
So the question for investors is, do they think Captivision can do all of this?
Yeah, it's a risk. But some people might think it's a risk worth taking if they think Captivision is going to, change for the better.
We've talked about a lot today. We looked at Captivision's numbers. We talked about their market. We looked at the technical indicators. And we talked about the management team. They definitely have some problems. But like we said, even companies with problems can, turn things around. So for our listeners who are thinking about investing in Captivision or just want to know what's going on with them, what's the most important thing to remember?
Do your research. Don't just believe what you read in the news. Look at the company's reports. Learn about their industry and understand, what they're good at and what they're bad at.
So basically, the more you know, the better decisions you can make.
Exactly. Whether you're investing in Captivision or any other company.
That's good advice. We always tell our listeners to do their own research and decide for themselves if they want to invest. And that's the end of this episode of Investing Talk Podcast. Thanks for listening. We hope this was helpful. Don't forget to subscribe so you don't miss our next episode. We'll be talking about, more interesting investments. And if you like this episode, tell your friends about it. And leave us a comment. We want to hear what you think about Captivision. Until next time, happy investing. Welcome back to Investing Talk Podcast. We're wrapping up our look at Captivision, ticker symbol CAPT. And like we said before, we're going to talk about the management team.
Yeah, because the people in charge really matter, especially for a company that's struggling like Captivision.
So who are these people? What have they done before?
Well, the CEO name, he's been the CEO for 5 years, and he used to work at a bigger tech company, so he knows the industry.
Okay. So he's got experience. Working in a big tech company, you learn a lot about how to, grow a business and deal with all the changes in tech.
Yeah, you'd think so. But his job at that company was more about operations, like making things run smoothly, not really about new products or technology.
Oh, so he might be good at the business side of things, but not so good at the innovation side.
Yeah. And when you look at the other people in charge, it's kind of the same. They have a lot of experience in business, but not so much in interactive video.
So they might not be the right people to lead Captivision. Yeah. Especially now that they need to be, more innovative.
Yeah, it's a concern.
Okay, so let's recap. The stock is down. They're losing money. They're not spending money in the right places. And the management team might not be right for the job. That's a lot of bad news.
It is.
So is there anything good about Captivision?
Yeah.
Any reason to think that things will get better?
Well, any company can turn things around, even if they're doing badly.
How could Captivision do that?
They need to start making money. They could try to get more customers or make new products or cut costs.
And they need to be more innovative.
Right. They need to come up with new ideas that people want.
So it's a long shot, but it's possible.
Yeah. It depends on whether you think the management team can, make the right changes.
Well, that's all the time we have for today. We've looked at Captivision's financials, we've talked about their market, and we've talked about their management team. And it's been, it's been interesting. Captivision has a lot of problems.
Yeah.
But there's always a chance that things can get better.
Yeah. Investing is all about risk and reward.
That's right. So for our listeners who are thinking about investing in Captivision, what's the one thing they should remember?
Do your research. Don't just trust what other people say.
That's good advice. We always tell our listeners to do their own research and make their own decisions. That wraps up this episode of Investing Talk Podcast. Thanks for listening. We hope you learned something. Don't forget to subscribe to our podcast. And if you like this episode, tell your friends and leave us a comment. We want to hear what you think. Until next time, happy investing.